Get ready for 8% mortgage rates. Folks, it looks like Fannie and Freddie are going to be coming out of conservatorship sooner rather than later. I suspect with risk premiums and spreads that you can count on having 8% mortgages when we have 7% mortgages today. We're going to have a conversation with Matt, the mortgage guy, and see if I'm all wet or I'm wrong and see where this might go. What's going on, brother?
Another day in paradise here in mortgage land, where people gripe. The longer we stay in an elevated interest rate environment, which it's funny. I looked at the chart this morning, and you think people would grow accustomed to it after
Yeah.
three. We're going on 3 years since mid 22, where
Yep.
we bounce around in the 6 to 7% kind of range. But to your
Mhm.
point, there's a lot of people that are saying mortgage rates could go to 8. And I've got some things that I was reading this morning, because obviously there's a lot of talk around, it's been since 2008. It's been 17 years since Fannie and Freddie entered conservatorship. For all intents and purposes, you could just think of that as, they're owned, backed, run, by the government.
Mhm.
And for them to become private, released from conservatorship, um, the natural thing for somebody to think is that removes a government guarantee, which increases risk, and rates have to go up. Good news is that this is actually being talked about. The
Mhm.
FHFA director Pulte and Trump are both saying that this implicit guarantee is going to stay in place, even if they're not under conservatorship, which layman's terms, rates should not, and I say should, with an asterisk, because none of us can guarantee anything, but it shouldn't have that upward pressure on interest rates just because we're removing this, quote unquote, implicit guarantee.
Well, so let's poke at that a little bit because again, sometimes it goes back to vocabulary. So from where I sit, there's implicit guarantee and there's explicit guarantee. Where we are sitting today under conservatorship, it is an explicit guarantee. There is no question that today, Fannie and Freddie, run by the government, as you said, have an explicit guarantee. Spinning them out public, being traded as a public company, doing the quarterly dance that all public companies do, we will not have an explicit guarantee. We may have a well-worded, well-constructed, yada, 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 Bill Pulte, President Trump, words of wisdom for implicit, like it's there but not there. I just don't know how rates don't go higher given spreads and risk premiums simply going from explicit to implicit. I think there's no logical way for rates not to go up because we're going to switch from an explicit guarantee we are there to support and back up to, oh, yeah, they're public and we're here just in case. That's implicit. I don't know how rates don't go up.
Yeah, I mean, you've got a point, because from everything I've heard or seen, no doubt, like, leaving conservatorship is going to redefine or weaken this guarantee, which is what you're saying. And
Exactly.
so that has a lot of potential upward pressure on mortgage interest rates. It'll be interesting to see if released, the capital requirements, guarantees, like a private bank, like
Mm-hmm.
they're going to have, in order to it not to affect rates, they're going to have to be really well capitalized, and people are going to have a lot of faith,
Not happening.
in it.
It's
And
not happening. This
so
this hope that rates stay the same is it's almost comical to me because again
Yeah,
there are
and like has happened with us in the past with a bunch of other stuff, maybe there's downward pressure on mortgage interest rates for other reasons, and this kind of cancels that out, right? And instead of going from 7 to 6.5, if they would have stayed in conservatorship, we continue to hover around 7%. And it probably reiterates, or should, um, the conversations I've had in the last 6 months with any buyers are, don't count on lower interest rates in the future. I think that that for a while I believed what I was advising, and I believed when I told somebody, yeah, let's do a 2-1 buy down, because rates are more likely to be lower 24 months from now, and you'll see that savings over the next 24 months, and then you can refinance. That's not something that I think in good faith I can advise clients on, is that you're going to be able to refinance, but people shouldn't ever be banking on that anyway. That's really what got people into trouble 2 decades ago, when they bought up real estate and were just told it's always going to appreciate in value. You're always going to be able to refinance. No big deal. Because something that maybe we talk about on a future call is, I know you're not a fan of this, so I know when I bring it up, Zuber's not going to be a fan, but lenders seem to be pushing on ARMs.
Of course they are.
It's less than 10% of the market. There's a lot of really, and lenders too, if you want to market something or sell something, it's really easy. Offer it at a great price. And so FHA and VA ARMs, these five-year ARMs, are 5.75%. And when you look at that versus maybe a 30-year of those same products at 6.75, now it's a big enough spread to make a difference, especially if you're talking a decent sized loan. And so with all of these dynamics going on, the uncertainty of where mortgage rates are going, it's probably lends to not necessarily entering into this 5-year ARM where you could go 5.75, 6.75, and it's going to have a 5% cap, so it can't go above 10.75. But you think 7% hurts? Try
9.
Try paying back something with a double-digit interest rate.
Yeah, it's pretty wild. Yeah, I when I really think about this again, I know, the administration is going to do everything they can to have rates stay flat or perhaps even go down. But I just see this. I just don't see how it happens, right? There's kind of 3 things going on, and they're all the wrong direction. First, you go from explicit to implicit guarantee, which we've talked about. That there's a cost for that, and it's up. Second, you have a risk premium, right? This is now a publicly traded company versus, backed by the full faith of the U.S. government. That's a risk premium. And then there's the spreads. We have long had spreads at, sub 200 basis points. Today, I think we're at 280. I don't know how spreads don't go up, especially if this transition occurs during a recession or a down economy, right? Because again, you're going to add into that the risk premium of additional job loss and foreclosures and all of that. I just don't know how we don't go to 8% mortgage rates, should this happen. There may be, they come out, there'll be a big party, maybe there'll be a couple of weeks where rates get soft, but then people will reprice spread, risk, implicit versus explicit, and rates are going to go up, and they're probably going to go up pretty quickly if my guess is correct.
Yeah, I think it has upward pressure on mortgage interest rates. Something that I haven't heard a lot of people talk about, what I think it's worth mentioning is I think this also has a positive impact on some of the non-QM stuff.
For sure.
I've seen it quietly gain market share, and I know ORAT listeners, Convoy, myself, other lenders, who are friends of the channel, we've continued to offer these products, especially in an environment where you start to see, man, if conventional and non-QM is priced the same, and I can get you a DSCR loan where you don't have to produce 14 different statements of your homeowner's insurance across all these properties, that's a smoother, easier path. If all of a sudden you've got more complication, upward pressure on interest rates and stuff with the Fannie Freddie product, non-QM becomes all the more attractive. And so that's another thing that we'll look out for is those products are going to be more and more attractive if
my goodness, I see another problem, right? If you so first off, I think you're absolutely right. Non-QM today is already very competitive. You take Fannie and Freddie out of conservatorship, they're even more competitive. But then what if you fast forward this 5 to 10 years, we have all these quote unquote non-banks, in the lending market. And what happens then? It's like, oh, dude, crazy times.
Right. Yeah. And, in the current environment where there's mergers and acquisitions and the smaller players are being gobbled up, it could get really messy. The advice stays the same. Work with a professional you like and trust. These professionals who do it, more than twice a year can say, listen, we're going to broker this, DSCR loan to this bank who will be in business 6 months from now, I remember during COVID and it wasn't something that we were advertising on billboards. We would have loans clear to close and they would just stop funding loans. The smaller non-QM, I can't remember the names of some of these green box or whatever the heck they were, but that's a real risk in a uncertain environment. And so it's the same advice as it's always been. Professionals you like and trust, working with lenders they like and trust is the recipe for success. The recipe for failure is, talking to somebody who sometimes just doesn't know what they don't know because they don't operate in it daily, and you get stuck, at the 11th hour in contract on a great deal, and you can't perform. There's no worse thing in real estate investing than that. And then somebody comes in, the seller's in distress, and so they've got to offer it at a deep discount to the buyer who can actually perform, and you're out.
Yeah. At the end of the day, folks, let us know in the comments below. Do you think Fannie and Freddie leaving conservatorship will raise rates or lower rates? Because right at this point, we're both just guessing. I think my opinion is pretty well known. But let me know in the comments below, up or down, when Freddie and Fannie leave conservatorship. Matt, where can people find you and reach out?
Go to greatmortgagebroker.com. Everyone's scenario is unique, so you need to talk to somebody, whether it's us or whether it's somebody else. If you're thinking about buying real estate, really anytime in the future, there's no better time than now to educate yourself, get yourself prepared, know your numbers. I'll continue to preach that and pound that into people's heads because I'll have conversations every single week. Somebody's looking at property, they're submitting offers. You ask them what the numbers look like, and they go, oh, well, maybe I'll figure that out once I'm in contract. Wrong. Figure that out.
Not a good idea.
GreatMortgageBroker.com.
Thank you, buddy. I appreciate you. Again, greatmortgagebroker.com. Later.